Good day everyone! Welcome back to my channel, and for today's lesson, we will discuss about the Forex market. Actually, this is just a part 2 of our lesson in the Forex management. So, kung hindi nyo pa yung napapanood, I suggest you watch it first kasi kadugtong lang ito. So, I will provide the link on the description below. So, let's proceed. What is a Forex market? So, a Forex market is a market where the currency of one country is exchanged for the currency of another country. The market is an over-the-counter market. Sabi ko nga in the part 1 is walang single marketplace or organized na exchange. Kasi di ba yung mga stock exchange meron talaga. Dito, wala. Ang mangyayari is yung mga dealers will just sit in their dealing room of major commercial banks around the world, and they will just communicate each other through telephones, computer terminals, and SWIFT mechanism. So later I will discuss all about those. So the Forex market is a wholesale market called the interbank market. So bank to bank. Commercial banks are the market makers. Corporations use the foreign exchange market for a variety of purposes relating to their operation, like pagbabayad nila ng mga inimport nila, conversion of export receipts, hedging of receivables and payables, payment of interest on foreign currency loans, placement of surplus funds, and etc. So yun yung pinagagamitan ng mga corporation para sa ng foreign currency. So for example, halimbawa umutang sila sa foreign banks, or halimbawa tayo sa World Bank, 'di ba? So we can use the foreign exchange market or yung interbank market to pay, lalo na sa interest ng loans na yon, or kung meron ang isang corporation ng surplus funds, tas gusto nilang mag-trade in the foreign exchange, so they can do that through the interbank market. Okay, so there are three levels of the forex market. First is the currency dealers or money changers, spot forex market, and interbank forex market. So let's discuss who are currency dealers or money changers. So alam naman natin to, di ba? They provide for encashment of travelers' checks and release of small amount of forex to travelers. So halimbawa, nag-travel ka sa ibang bansa, so magpapapalit ka sa kanila. So those are money changers. The money changers quote the buying and selling rates for various currencies. Most of the time it varies. So for example, one tip, if you're going to travel abroad, huwag kang magpapapalit sa airport kasi medyo mababa ang palitan. So there are specific money changers sa bawat bansa na dito sa part na to mataas yung palitan. So search nyo na lang kung saan. So yun, tapos although halimbawa kailangan mo lang ng konti munang fund para lang maka-travel ka from airport to the hotel, magpapalit ka ng konti sa airport, pero wag lahat. Kasi nga mababa yung palitan. So yun, so those are currency dealers or money changers. Iba-iba sila. So yun, kasi ano yun, kumbaga may tubo na sila. So halimbawa, itong isang money changer na to, liliitan niya lang yung tubo niya para malaki yung palitan sa kanya, ganon. So yun, so ganon yung strategy na ginagawa nila. Next is the spot forex market. So this market is involved with the exchange of currencies held in different currency denominated bank accounts. Ang efficiency ng spot forex market is revealed in the extremely narrow spreads between buying and the selling prices. Yung spreads na yon can be smaller than a tenth of a percent of the value of that currency na pinapalit. And ang technical definition, kapag kasi nag-undergo ka ng spot forex market, is a spot contract. Okay? So, mag-under ka sa isang spot contract. Spot contract is a transaction at the current market rate with a settlement that takes place between or within 2 business days. So, yung nangyari sa spot forex market, di ba? Parang pinalit mo ngayon, pwedeng mag-process pa bukas or sa susunod pa. So, parang check din sa bangko. So, yun. So, may ano doon, may risk doon. Kasi paano kapag bukas bumaba or tumaas yung value niyan nung currency na yon. So that is the spot forex market. And last one is, or ang spot exchange rate naman is determined in the spot market. It is the number of units of one currency per unit of another currency, where both currencies are in the form of bank deposits. So ito ginagawa usually in sa banks. So ang deposits na ito ay tina-transfer from sellers to buyers account. And then yung delivery value or actual transfer is spot or immediate. But again, kahit spot or immediate siya, it will usually take 1 to 2 days. This distinguishes the spot market from the forward market. So later we will discuss what forward market is. Spot exchange rates are determined by the demand-supply equations of the currencies being exchanged. So that is the spot exchange rate. Next is the interbank forex market. The interbank, it is an informal arrangement of the larger commercial banks and a number of foreign exchange brokers. So there is a broker din, pero yun nga, wala siyang formal or parang ginawang um, yung formal arrangement ng parang sa stock trader. So wala siyang ganon. Pero may mga broker siya. Yung mga banks and brokers are linked by telephone, telex, computers, and a satellite communication network called the Society for Worldwide International Financial Telecommunications or SWIFT. Ang interbank foreign market, again, this is the largest financial market in the world. And yung phenomenal size niya can be put in perspective by noting, for example, na yung foreign exchange turnover ay nag exceed sa lahat ng, halimbawa, pinag-combine mo yung world's stock markets, mas malaki pa din ang foreign exchange turnover. So, ganun siya kalaki. Indeed, sabi nga, it takes over 2 months average trading on the NYSE. If you know New York Stock Exchange, that's the largest stock exchange in the whole world. 2 months na average trading nila, 1 day trading lang in the Forex. So imagine that. That is how big the interbank Forex market is. Because of the speed of communications, significant events have virtually instantaneous impacts everywhere in the world. Siguro dahil na rin sa technology, so dahil yun nga, merong telephone line, meron ng mga computer, so mas mabilis yung transaction in the Forex market. So that is the interbank Forex market. So now, ayan, let's discuss naman the factors affecting Forex rates. So, paano ba yun nade-determine at paano ba yan tumataas or bumababa? Ano bang mga nangyayari? Um, Forex being a commodity like any other commodities, the exchange rate fluctuates from time to time. So, yun nga, paiba-iba talaga yan. Kaya nga, risky din. So, yun. So, there are various factors that cause the fluctuations in the rates of exchange. Itong mga factors na to can be divided into several following groups. And these groups can affect the exchange rates on a short term as well as the long-term basis. So, the first one are fundamental factors. So, include all such events that affect the basic economic and fiscal policies of the concerned government. We have the following fundamental factors. Etong factors na to normally affect the either short-term at most of the time the long-term exchange rates of any currency. Ano ba yan? The fundamental factors are the basic economic policies followed by the government in relation to inflation. So, yung inflation, basta relating to the economic status of that particular country, part yun ng fundamental factors. Balance of payment position. Ma'am, ano po yung BOP? If you can still remember in our international business and trade, ibig sabihin, ang balance of payment is yung country's export can pay for their imports. So, yung mga kinukuha nila, nababayaran or equal lang or mas mataas pa yung in-export nila. Kapag mataas ang balance of payment, magandang economy ng isang country. Kapag mababa or deficit sila, ibig sabihin mas marami yung ini-import nila, kinukuha nila sa ibang bansa kaysa sa dinadala nila sa ibang bansa. Nagkakaroon ng pagbaba ng currency ng isang bansa. Unemployment also. Capacity utilization, trends in import and export, and etc. Normally, other things remain constant. The currencies of the countries that follow sound economic policies will always be stronger. So, basta okay yan lahat, yung inflation, BOP, walang masyadong unemployment or mababa yung rate, yung economic policies are good, so maganda yung currency. So, for other countries, which are having balance of payment surplus, ayan, yung mas maganda ang exchange rate, favorable sa kanila. Kapag ka naman deficit sa balance of payment, ayan, the exchange rate will be adverse naman. So, continuous and ever-growing deficit in balance of payment indicates overvaluation of the currency concerned and parang imbalance. Merong imbalance na nakakreate um, doon. So, ang nagiging solution is devaluation ng currency. So, ganun siya. So, that is one of kumbaga situation na nangyayari na nakakapagpataas or baba ng isang currency ng isang bansa. Next is the political and psychological factors. Many currencies have a tradition of behaving in a particular way. For example, we consider Swiss franc as a refuge currency. Bakit? Kasi they said na Swiss franc is a stable currency. So, yun. So, kumbaga parang natanim na naging norm na kapag Swiss franc maganda to. US dollar also, it is considered a safer haven currency whenever there is a political crisis anywhere in the world. So yun, so alam mo yun, parang because of the political and the psychological na rin, na parang naiisip na ng mga tao na US dollar is a malaki, 'di ba? Euro, 'di ba? Kaya yung mga tao, they want to earn dollars, they want to earn euro kasi malaki yung ganon. Nagkaroon na ng psychological factor. Kaya din nakaka-affect din yun sa foreign exchange rate ng isang currency. Next factors are technical factors. So, we have different factors under technical factors. Number one is the capital movement. So huge surpluses of petroleum exporting countries due to sudden spurt or biglang pagtaas ng oil prices could not be utilized by these countries for home consumption entirely and needed to be invested elsewhere productively. So yung phenomenon of capital movement affecting the exchange rate has a very recent origin. So, kasi yung movement ng petrodollars, it starts affecting the exchange rate of various currencies. Capital tended to move from lower yielding to higher yielding currencies, and as a result, nag-move din yung exchange rate because of the capital movement. Next, hindi lang ito petrolyo, pwede rin na iba pang capital na kino-consider in that particular country. Basta tumaas yun or bumaba, nagkakaroon din ng movement in the exchange rates. Next is the relative inflation rates. It was generally believed until recently na ang one prime factor ng ng direction ng exchange rate to move was in the direction adjusted to compensate the relative inflation rate. So, if a currency is already overvalued, medyo mataas na yung value niya, or halimbawa, stronger than what is warranted by relative inflation rates, of course, magde-depreciate yan. So, depreciation sufficient enough to correct that position can be expected and vice versa. So, if you can still remember the balancing feedback loop, so kumbaga meron ng relative based on the relative inflation rate, meron lang this na particular na amount na pwede or okay itong particular currency na ito. For example, yung dollars, di ba naglalaro lang yan sa, dati na 45 yan to 52, 53, nandoon lang siya. So yun, pero kung may mga mangyaring big event that will change the history, possible na maging 60 pa yan, ganyan, pero doon lang siya naglalaro. It's the same with euro, di ba? Ang euro nasa 60 or 60 plus, ganon. Doon lang siya naglalaro. So yun, so that's one of the relative inflation rates. It is necessary to note that exchange rate is a relative price and hence, the market weighs all the relevant factors in a relative term in relation to the counterpart countries yon. So, ang underlying reasoning behind this conviction was a relatively high rate ng inflation ay nagre-reduce ng country's competitiveness in the international market. And syempre, nawiweaken yung ability nun to sell in foreign markets kasi nga ang taas ng benta nila. Ngayon, it will weaken the expected demand for their foreign currency. So, mag-i-increase ng supply sa domestic currency at magde-decrease ng supply in the foreign currency. So yun, so in the history, during the 1981 to 1985 period ng exchange rates ng major currencies, it did not confirm yung direction ng relative inflation rate na katulad nito. Yung dollar kasi is persistently um, um, increasing in their rate for such a long period. So yun. So that is one of the reasons why medyo etong relative inflation rate is it was believed na ito yung one of the prime factors, but right now kumbaga parang medyo na ano na ito, parang nadi-discredit na itong principle na ito. Next is the exchange rate policy and intervention. Exchange rates are also influenced in no small measure by expectation of changes in regulation. Yung mga batas ng isang particular country na lalo na kung related to exchange markets and official intervention. So, official intervention can smoothen an otherwise disorderly market or make it ultimately more steep, and sudden exchange rate swings can occur. Um, uh, in the there is an later I will share about it. There is an yung official intervention kasi sabi nila it can smoothen the disorderly market, but it is also the experience that if the authorities attempt half-heartedly to counter the market sentiments through intervention in the market, mas nagkakaroon ng swing in the exchange rate. Alam mo yun yung parang minsan uh, it's because of di na dahil sa para ma-save yung country nila or magkaroon ng benefit yung country nila, but also for their own benefit. So yun, so mas nagkakaroon ng instability with the exchange rate. Okay, next is the interest rates. Ayan, an important factor for movements in exchange rates in recent years has been difference in interest rates or interest differential between major countries. Ang growing integration of the financial markets of major countries, revolution ng telecommunication facilities dahil sa technology, growth of specialized asset managing agencies, or deregulation of financial markets by major countries, nag-emerge na din ng forex trading sa kanila, nag-accelerate doon yung potential para sa exchange rates volatility at pagkakaiba-iba. So yun. So, last one is speculation. Ayan, ito yung kaninang sa speculative trading. So yun. So, speculation or anticipation of the market participants many times is the prime reason for exchange rate movements. Yung total forex turnover kasi worldwide is many times the actual goods and services related turnover, indicating the grip of speculators over the market. Speculators yung mga nanonood, yung mga nag-aaral, nag-anticipate ng mga events na yon. They anticipate the events even before the actual data is out and position themselves accordingly to take advantage when the actual data confirms the anticipations. Imagine mo, for example, may nagsabi na may nag-anticipate na, oh, mag-grow yung currency ng ganitong, ba, ng ganitong bansa. So ngayon, syempre lahat ng forex trader, bibili na sila ng currency ng ganong bansa. So yun, so these speculators many times concentrate only on one factor affecting the exchange rate. And as a result, so in the psychological factor, di ba, it tends to concentrate only on that factor, neglecting all the other factors that have equal bearing on the exchange rate movement. Under these circumstances, ayan, kahit naman yung ibang factors may indicate negative impact on the exchange rate ng currency, kapag ka na-emphasize ng mga speculator na ito naman kasi ay hindi ordinaryong tao lang. So they are experts din when it comes to the economy, sa pag-aaral, sa pag-anticipate whether it will something or some currency will lose its value or tataas yung value. So talagang may say sila. Kapag pinaniwalaan nyo ng mga tao at ng mga forex trader, bibili sila nun. So yun. So what happens is kahit na yung ibang factor na hindi nila na-consider is may create negative impact on the currency rate, the market is it will come out positive that the currency will be strengthened. So yun. So this is one of the kumbaga parang nangyayari talaga. Ayan. And yung speculation is kumbaga parang relevant or nagiging evident talaga in the forex trading nowadays. So yun. So there are other factors. Ayan, you can, if you want to know more factors, especially if you want to undergo a forex trading, so yun, you can search it online and then pag-aralan mo siya talaga. Kasi it is kind of risky, but again, it is challenging, it is growing. So those are the factors affecting foreign exchange rates and the Forex manager. So yun, and Forex market. So we're done with our discussion for today. Thank you so much for listening, and I hope you learned a lot in this lesson. If you have learned a lot, please don't forget to like this video, subscribe on this channel, and to share this video on your friends and classmates. Thank you so much for listening, and I hope to see you on my next video lessons. Bye. God bless.